What is going on, my amigos? How are you guys doing today? Today's date is February 7th, 2021. My name is Ryan Williams and we are back with another video. In today's video, guys, we are going to be covering a topic that I'm most certainly very excited about, and that is dividend stocks. That's right, we are going to be talking about some of my favorite dividend stocks and the ones that I plan on buying a bunch of in 2021. And real quick, before we get rocking and rolling in today's video, if you guys wouldn't mind just doing me a quick favor, you know what's coming. Give this video a big thumbs up, okay? Be sure to hit that like button, and while you're at it, also be sure to subscribe so you don't miss out on any future videos, okay? All right, thank you guys for doing that. And now that that's taken care of, without further ado, let's get into it. All right, guys, now as I mentioned at the beginning of this video, we are going to be talking about a handful of different dividend stocks, and all the ones we'll be covering today are ones that I personally currently own. I'm very excited about owning them. And these are also stocks that I plan to buy a lot more shares of this year and in the years following. And to kick things off with our first stock here, let's get right into it and talk about one that I think everyone's going to be a big fan of, or at least a lot of people will, and that's AT&T. All right, now as you guys see here, we've jumped over to the screen. We are looking at trackyourdividends.com. This is my entire portfolio here. And if we scroll down here, we can see that AT&T, which is ticker symbol T, makes up about 8.5% of my total portfolio. So it's a fairly substantial chunk. Now there are a handful of reasons I have so much AT&T, and the first of which, let's switch over here to Seeking Alpha, pertains to AT&T's dividend, which is something that they are known for. So AT&T currently has a dividend yield of 7.19%, and they have been growing this dividend consecutively for 36 years, and that is a long time. And these two metrics here are a couple great examples of why I'm such a big fan of this stock, okay? It's a great dividend paying stock. Because it's been growing the dividend for so many years, we can assume that it's gonna be a fairly reliable company to invest in, because it seems that they take their dividend very seriously. In fact, they have to, because as far as the performance of the share price of this stock, of this company, it hasn't been the greatest over the last handful of years. And if we go back up here to this summary page, we can see that in the last year, AT&T is down about 23.5%. And then if we move over to 5 years here, we can see that AT&T is down about 21.5%. As an investor, that's typically not something you like to see, especially if you are an investor who relies on the capital appreciation of these shares to benefit from them. But if you are a dividend investor such as myself, you will actually see this decreasing share price as somewhat of a good thing, because it means, at least for the last 5 years or so, we've been able to buy AT&T for 20% off, 21% off. And going back to this dividend page here, that's huge, because it essentially means we are getting cash flow at a discount. Okay, so this is one of the key reasons I like AT&T so much, and why I'm gonna keep buying some this year and the years following. Unless something substantial changes, then we'll have to reconsider. But for the meantime, that's kind of the plan. And if we move back over to the summary page, I know we're kind of bouncing back and forth a lot, guys, but it is possible that we do see this share price increase sometime in the near future. Now, AT&T has been seemingly killing it with HBO Max. From what I've read, there's a lot more people signing up. That's bringing in some good revenue to the company, which hopefully should result in some more excitement around what they're doing, which maybe could result in the share price going up. If we go back to this little graph here, this little chart, just in the last year, I mean, last March, last February, AT&T was almost $40 a share. So at the very least, guys, we have about $10 per share that we could grow if things do get back to normal, and that's also something to take into account here. AT&T is also a pretty big player in the 5G space, which as we move into the future will become more in demand, and more people will be utilizing 5G connectivity, which is only going to be helpful for this company, bringing in more revenue, which hopefully will, result in a higher share price, and also continued growth of the dividend. So kind of all these things combined, and at least in my opinion, result in AT&T being a good company still to buy. I think there are some people out there with inhibitions and people who think that AT&T's time is over, and if you are one of those people, I actually would be curious to know why. So leave me a comment below, let me know what you think about AT&T. So moving on, guys, the next stock we are going to be talking about is the Coca-Cola Company, ticker symbol KO. Now, just right off the bat, Coca-Cola is one of those companies, it's one of those brands that has been able to transcend multiple generations. If we scroll down here to their company profile, we can see that Coca-Cola started in 1886, which was like 135 years ago. Double check my math on that. But they've been around for a long freaking time, okay? They are very well established. It's an international company, and I think, you know, probably 90+% of the people on this planet have heard of Coca-Cola and are familiar with its brand. I mean, you see the Coca-Cola logo, you know exactly what it is. There are few other companies that have a brand as powerful and as widespread and as well known as Coca-Cola. Everything else aside, I think that's a pretty good reason to invest in this company. But, you know, that is not all there is to it. It is a little more complicated than that. And one thing too that actually a lot of people don't realize is Coca-Cola is not just Coca-Cola. They don't just sell that soda. They have actually a lot of other things. And if we go over to this page right here, this will show some of their brands. We can actually, just looking at this right here, we've got Peace Tea, Fuse Tea, Sprite, Fanta. And if we scroll down a little bit more, we'll see they have a ton of other brands, a ton of other companies that work under their umbrella. Dasani Water, Smart Water, that's a huge one. Okay, Minute Maid, are you kidding me? Scrolling down even more, Honest Tea. Costa Coffee, I'm a big coffee guy. I don't know much about Costa Coffee, but I have heard that it's a pretty big deal over in Europe. Scrolling down even more, Fairlife, they make dairy products and stuff like that. Powerade, you guys have certainly heard of that. Schweppes, that's ginger ale, tonic water, very popular company. We kind of saw this above, Smart Water was above, but they also own Vitamin Water. Topo Chico, have you guys tried that? I have not had the chance to try that yet, but I heard it's good. Ooh, last one, Fresca. Love Fresca, okay? So, you know, you guys get the gist of it. It's not just Coca-Cola. They are pretty well diversified in the brands and companies that they represent. Now, let's get to the good stuff, guys. Let's head over to Seeking Alpha here. Let's go look at Coca-Cola's dividend, because that's really what we're here for, right? So going down to this dividend summary right here, guys, we can see that Coca-Cola currently has a 3.3% dividend yield, with a 5-year growth rate that's somewhat respectable of 4.44%. And then if we move over here to this dividend growth, 58 consecutive years of dividend growth. So if you guys thought AT&T grew its dividends for a long time, well, Coca-Cola is one-upping it quite a bit. So Coca-Cola has grown its dividends year after year for 58 almost 60 consecutive years. And because it's been growing it for so long, and also because this company is a very stable company, like I mentioned, they've been around for 135 years, I think it's safe to say that this is a pretty reliable, pretty safe investment, okay? And for someone like me, I consider myself more of a conservative investor. This is exactly what I'm looking for. I'm looking for something that has a pretty decent, you know, current dividend yield, 3.3%. That's not bad at all. I wish the growth rate was a little bit higher, but still respectable, okay? The dividend growth time is just, you can't ask for anything more. Plus, I mean, these aside, I really like drinking Coke Zeros. Don't tell my girlfriend, but I've been stealing some of hers from time to time. I just blame it on the cat though, and it's no big deal. But anyway, guys, for these reasons I just mentioned, I'm a big fan of Coca-Cola. It's one of my favorite stocks to buy. I'm definitely gonna be buying a lot more this year, and I'm most certainly gonna be buying a lot more as time goes on. So all my Coca-Cola fans out there, be sure to leave a like on this video. One up for Coca-Cola, okay? All right, guys, now moving on to the next stock here. This company, in my opinion, is kind of like the food version of Coca-Cola. So Coca-Cola, as we've covered, has been around forever, pays a good dividend, and they have a ton of other beverage companies under their umbrella. Well, as I said, Campbell's is like the food version of that. Campbell's has also been around forever, over 150 years. If we scroll down here, we'll see that they were founded in 1869, which was 151 years ago. I'm sorry, 152 years ago. So they've been around for a long time, okay? Their dividend's pretty sweet, okay? We'll get to that. But number 3, they also have a ton of food companies that operate under their umbrella. Okay, and we'll cover that right now. Let's go over to this brand page here. Now, while I'm not a big soup guy in the slightest, I am a huge snacker. And some of the brands that operate under Campbell's umbrella are actually some of my favorites. So if we scroll down and check some of these out, Goldfish, love Goldfish, okay? Kettle Brand, I don't eat a lot of chips, but I do love their salt and vinegar chips. Late July, guys, if you have not tried Late July chips, head to your nearest Costco, pick up a bag of like what are they? Jalapeno what? The jalapeno lime chips. Pick yourselves up a bag of that. You will not regret it. Moving on, Milano's. Everyone loves those little cookies. Other Pepperidge Farm products, they also make Goldfish here. Pace salsa, I skipped over this one. Pop Secret popcorn, SpaghettiOs, not my thing, but you know, still pretty popular company. Snyder's of Hanover, these guys make pretzels and pretzel products. Snack Factory also makes pretzel products. Prego, I think that's more like canned food, right? And then V8, everyone knows V8. As you guys can see, Campbell's, you know, has a lot of great snacks and other companies under their umbrella. And so it makes them pretty diversified, which creates some sense of security when investing into this company. Now, if we move over to Seeking Alpha here real quick, let's head over to the dividends page right here. And as we scroll down here, guys, we will see that Campbell Soup, CPB, currently has a dividend yield of 3.12%, so just slightly lower than Coca-Cola's. They have a 5-year growth rate of 2.33%, which is also lower than Coca-Cola's, and they have only been growing their dividend for 1 consecutive year. And that's not to say that they stopped paying their dividends. If we go over to this dividend history here, we will see, while they haven't grown it every single year, they have consistently paid out their dividends. They have, at least for the last 30-ish years, they have not paid a dividend. Double negative, I don't like to use those, sorry about that. If we go back to the dividend scorecard over here, as I mentioned, their dividend it's somewhat sweet. It's not as high as Coca-Cola, okay? It's not growing as quickly as Coca-Cola, and there aren't nearly as many years of consecutive dividend growth as Coca-Cola. So, in terms of dividends, this is kind of lacking a little bit, but we can use this to our advantage, guys. By buying into this company now, you will be able to establish a great yield on cost position because over time, this company will grow their dividend. So anyway, like I said, right now, it's not necessarily the best dividend company to buy into, but this would be more of an anticipatory investment for maybe 5 years, 10 years, 20 years down the road. Just because the dividend isn't quite where some of the other companies are yet, I do believe it will be in the future. I think that if they can really focus on their dividend, get it growing, and keep it growing, I think it will attract more investors, which, you know, more demand is just gonna increase the price of these shares here. So like I said, this really is an anticipatory buy, but nevertheless, I do believe it's a secure company to get into. You know, we saw their dividend history. It's reliable, it's secure, you're gonna be getting paid a dividend. And little asterisk there, while that's not guaranteed in any case, in this one it does, you know, like I said, it seems secure. It seems likely they'll continue to pay it. All right, guys, now moving on to our fourth company here, I want to talk about Bank of America, ticker symbol BAC. So as of late, I'm sure a lot of you guys who frequently watch, you know, some of these finance YouTube videos, you will hear a lot of people talking about JP Morgan Chase, ticker symbol JPM, as being like the financial stock to buy. It's like I think it's like one of the most commonly talked about dividend stocks I've been seeing lately. And I think that's because people think the dividend's good, but also the capital appreciation's there, so it's kind of hitting both. I think that's why people are so hyped on JP Morgan. But I gotta say, don't sleep on Bank of America, okay? It is actually, arguably, in my opinion, a little bit better as far as dividends go. So what I'd like to do now is I would just like to compare Bank of America with JP Morgan. And as a disclaimer, I am long on both of these. I own both of these companies. But I don't know, I think Bank of America is a little bit overlooked. So just comparing the dividends here real quick. So Bank of America currently pays a dividend yield of 2.22%, and switching over to JP Morgan pays a 2.61% dividend yield. So yes, JP Morgan pays a higher dividend right now, but bear with me for just a moment. Let's go back to Bank of America here. So the 5-year growth rate of Bank of America's dividend is 29.2%. Even if we're not comparing that to anything, that is a very substantial growth rate. And if we move back over to JP Morgan, we'll see that that company's growth rate is 16.47%. So Bank of America, 29.2, JP Morgan 16.47. There's about a 13% difference, which is a pretty big deal. Now, Bank of America has been consistently growing their dividend for 7 years, but JP Morgan has been growing it for 10. So just a couple of years more, they're pretty comparable in that regard. So having said all this, guys, why I think Bank of America is probably overall a better dividend stock is because of this growth rate right here. So yes, today it's not paying as high a dividend as JP Morgan, but its growth rate, its dividend growth rate is so much larger. So it's only a matter of time, and it will take a short amount of time for this to happen. But it's only a matter of time before Bank of America's dividend passes up JP Morgan's dividend. Another pro to Bank of America over JP Morgan, in my opinion, is the share price. So Bank of America currently $32.37 per share. JP Morgan, if we scroll up here, is about $138. So there's about like a $105 difference between these, between the shares of these companies. Having said that, you're gonna get a lot more bang for your buck going with Bank of America. The cost of entry is so much lower. You're gonna be able to pick up, probably more shares. And, in a short amount of time, as far as dividends go, you're gonna be in a better situation than if you were to buy into JP Morgan. As far as capital appreciation goes, I don't know which one's gonna be better. I don't know if Bank of America's share prices are gonna increase faster than JP Morgan's. I'm not entirely sure, guys. But I will say this, I'm pretty pumped on Bank of America's dividend. I think it's kind of a sleeper. I don't hear a lot of people talk about it too much. Look a little bit more into Bank of America. And actually, if I'm missing something here, if you guys know something I don't, obviously there's a lot more we can talk about with these two companies. But if you'd like to share your thoughts on this matter, just leave them in the comments below. I would be curious to know what you think, because what I say here is not set in stone. I very well could be missing something. So, all right, guys, so the fifth and final stock I want to talk about today is one that you maybe have heard of, but possibly didn't expect to see in this video. See, I don't talk about ETFs too much. I used to have some, then I didn't. This is the only ETF I have now. And the ticker symbol for this is ARKW. It's the ARK Next Generation Internet ETF. And this was created by ARK Investments, Cathie Woods. I'm sure you guys have heard of her. If not, just do a quick Google search, a quick YouTube search, and get ready to get your mind blown. But anyway, before we go any further, let me just point this out right here. This ETF is up 165%, which if you didn't know anything else about this ETF, you would look at that and say, okay, there might be something to this one. But just to kind of explain what it is real quick, guys. So if we go down to this fund profile, essentially this ETF is comprised of companies that operate across the information technology sectors. And if we scroll down here a little bit more, we'll see that its top 10 holdings are companies you've definitely heard of. Tesla, Roku, Square, there's a Bitcoin trust, which is kind of cool, Spotify, Facebook, Snapchat, and then a ton more. The reason that I like this ETF, number one, is because it offers exposure to a ton of great tech stocks, which otherwise I probably would not buy into. And the only reason I'm buying into this ETF is because it also pays a dividend. So if we go up here to the dividend page, we scroll down and we'll see the dividend's nothing to write home about yet. 1.08% dividend yield with 1 year of dividend growth. This is another kind of anticipatory buy as it relates to the dividend. I don't know what's gonna happen with it. But going back to the summary page, like I showed you guys a minute ago, it's up 165% for the last year. That's pretty insane. So this ETF does offer a lot of growth potential, and that's mainly why I'm holding it for now. And the dividend is just a bonus. But truth be told, I wouldn't buy into it if it didn't pay a dividend. As you guys know, that's kind of my thing, and I need to stick to it. ARK Investments has some other ones that you can buy. The ticker symbols are all pretty similar. ARKW, like ARKK. I think there's like an ARKQ maybe, I don't know. It's always ARK and then some other letter. So look into these. I don't know if all of them pay a dividend. I just know this one does. And I think so far in my position with this, I only have like 5 or 6 shares of this ETF. And those shares are up about 20%, maybe a little higher than 20%. And I've only been owning it for no more than 2 months, I would say. So it's grown pretty substantially, pretty quickly. And I'm at least gonna hold on to it this year. We'll probably buy some more of it this year, and we'll see how it goes in the future. I'm not quite sure yet. But this is a great ETF, at least I think. in terms of growth. So that's why I'm kind of stoked on it now. All right, guys, well, that pretty much wraps it up for today's video. Hopefully you learned something, got some good dividend investing ideas. Although, you know, I'm not reinventing the wheel or anything here. These are pretty popular companies. I'm sure you've heard of them before. I'm sure some of you may already be owning them. And with that said, I'd be curious to know, what are your thoughts on some of these stocks mentioned today? What do you think about AT&T? What do you think about Coca-Cola, Campbell's, Bank of America, the ARKW ETF? Let me know your thoughts in the comments below. Would love to get a chat going. There really is so much more that could be said about these companies, about these stocks. My intention with this video was just to give you a kind of an overview of the ones that I'm excited about, the ones that I'm looking at buying this year. And also, these are ones that I do think will be good investments down the road. So, you know, AT&T is not going anywhere, at least in my opinion, it's not. Coca-Cola is definitely not going anywhere. Campbell Soup, been around 150 years. It's gonna be around for some more time. So yeah, that was kind of the purpose of this video here. If nothing else, you know, hopefully this just gives you a good idea of some different stocks to buy, especially for you dividend investors out there. So anyway, once again, thank you guys so much for watching this video, especially if you've made it this far. And if you have made it this far, and if you haven't done so already, please give this video a big whopping thumbs up, okay? Hit that like button for me. And while you're at it, please be sure to subscribe as well so you don't miss out on any of the future videos we'll be putting out here. Some good stuff coming up. I'm excited to share it with you guys. Now, before I sign off real quick, I am about midway through transferring all the stocks from my Robinhood portfolio into my Charles Schwab. I thought there'd be a chance that I wouldn't be able to do Market Mondays tomorrow. However, what I've done is it's a simple fix. I'm surprised I didn't even think of this as a possibility until recently, but I just, you know, invested $100 into Charles Schwab. So guys, we'll do Market Mondays tomorrow. We're gonna do it through Charles Schwab. It's gonna be our first time doing Market Mondays through Charles Schwab. So be sure to tune in to tomorrow's video. It's gonna be interesting to see how this goes. And once again, thank you so much for watching. I hope you guys have a great day, and I will see you in the next one.